Hello everyone, and welcome back to Fintech Insights USA. I'm thrilled that you're here today. In this video, we're diving deep into the rapidly evolving landscape of American financial technology. We'll be looking at emerging trends, regulatory developments, strong players, and where the industry might be headed next. So buckle up, because we've got a lot to explore together. Let's begin by setting the stage. First off, fintech in the United States has grown dramatically over the past decade. We've seen an explosion of digital payment systems, digital banks, lending platforms, robo-advice, crypto offerings, and so much more. While innovation has soared, so has the need for smart regulation. That brings us to the current regulatory environment. The U.S. financial regulatory landscape is complex. At the federal level, agencies like the OCC, CFPB, CCFTC, FinCEN, FDIC, FRB, and others all have overlapping jurisdiction over fintech firms. Some fintech companies find navigating this web of agencies challenging. They operate in multiple verticals, from payments to lending to digital assets, and must comply with rules from more than one regulator. At the state level, individual states have their own licensing regimes and supervisory bodies. As a result, fintechs often face inconsistent requirements across state lines. This fragmentation creates compliance headaches, but it also sets the stage for innovation through regulatory sandboxes and coordinated initiatives. That brings us to emerging solutions. Regulatory sandboxes have become a powerful tool in certain states. Arizona and Wyoming, among others, have set up controlled environments for fintechs to test products with reduced regulatory burden. These sandboxes help regulators understand new technology before drafting broad rules. Meanwhile, the Treasury Department's Office of Financial Innovation and Transformation is working to modernize and streamline cross-agency coordination. And the Global Financial Innovation Network, or GFIN, allows U.S. agencies to collaborate internationally. Together, these efforts aim to balance innovation with consumer protection. Now, let's shift our focus to key fintech verticals making waves. First, we have digital payments. The Federal Reserve's FedNow real-time payments system launched in mid-2023. It enables instant settlement, which is transformative for consumers and businesses alike. Fintechs that offer peer-to-peer transfers, bill payments, and other digital services now compete with real-time rails native to the banking system. This drives both collaboration and disruption across the market. Digital banking and neobanks are also on the rise. These institutions operate entirely online, typically partnering with chartered banks to offer FDIC-insured accounts. They often attract consumers with lower fees, higher interest rates, and streamlined user experiences. Still, fintechs pursuing national charters face legal scrutiny around special-purpose banking charters. That said, digital banks continue gaining market share, particularly among younger, tech-savvy customers. Next, online lending platforms are reinventing the borrowing process. They offer faster approvals and accessible credit, often using alternative data to assess risk. However, regulators like the CFPB are closely monitoring fairness and transparencies, especially regarding automated underwriting and potential bias. Borrowers deserve clear terms and responsible access to credit, and fintech lenders must deliver on that. Robo-advisors and digital investment platforms are democratizing wealth management. Algorithms now guide portfolio choices, automated rebalancing, and financial planning with minimal human intervention. These platforms are regulated by the SEC and must uphold fiduciary responsibilities. As AI takes a larger role, oversight remains crucial to ensure accountability and transparency. And of course, we have crypto and decentralized finance, or blockchain-based lending, borrowing, trading, yield farming, and decentralized exchanges are reshaping how value moves. But regulators like the SEC and CFTC are increasingly focused on protecting investors and preventing fraud. The lack of centralized authority in DeFi challenges traditional regulatory frameworks. Yet despite this institutional interest in tokenization, stablecoins and digital asset infrastructure continues to grow. Now, let's talk about innovation, drivers especially AI. Generative AI is transforming workflows across financial services, from customer service via virtual assistants to fraud detection and compliance automation. AI tools are enhancing productivity, yet they also introduce risks like AI-generated phishing, deepfake fraud, bias, and opacity. Regulators are responding with new guidance, and there's growing demand for explainable AI, adversarial testing, auditability, and human oversight. Fintech firms must walk a fine line capturing AI's potential while safeguarding trust and transparency. Beyond AI, data privacy and security remain foundational concerns. Fintechs manage sensitive consumer data, financials, health, location, biometric, and more. Following executive guidance from early 2024, regulators have intensified scrutiny over personal data protection, especially regarding foreign access. Companies must adopt strong encryption, consent management, privacy-preserving techniques, and robust governance. In emerging markets, privacy research has flagged growing consumer risk, underscoring the need for responsible data practices everywhere. All right, now that we've covered verticals and risks, let's highlight some standout US fintech players and initiatives. Plaid is a linchpin of the fintech ecosystem. It connects millions of consumers, developers, and institutions. But as financial fraud becomes more sophisticated, especially, using AI, Plaid is doubling down on security and fraud prevention. It's emblematic of how infrastructure fintechs must be vigilant guardians of data. Current is another fascinating example. Its mobile-first accounts, early access to earned wages, and fee-free crypto features resonate with millennials and Gen Z. Its inclusion in industry councils signals growing influence on fintech policy and advocacy. iCapital, though less widely known, is notable for its focus on investor education and alternative markets. With a chief investment strategist from a high-profile media background, they're emphasizing transparency and financial literacy, not just performance metrics. Then there's Drip Capital, innovating in trade finance for small and mid-size exporters. By using flexible credit and data inputs, fintech can unlock global trade access for underserved firms. It's fintech with a global, inclusive edge. Let's talk about fintech's social purpose. Advances in NLP, AI, and mobile technology can empower underserved populations. From better financial advice to inclusive insurance and lending, fintech can close gaps if designed mindfully. Research in emerging markets underscores how technology's broad adoption mandates corresponding privacy and fairness safeguards. Now, where is the industry heading next? First, we expect real-time payments like FedNow to accelerate innovation in digital budgeting, business payments, and remittance services. Instant settlement is foundational for frictionless financial experiences. Second, AI will become more embedded, from user experience personalization to regulatory KYC and KYP work. Fintechs will need to invest in models that are trustworthy, ethical, and explainable. Third, regulatory coordination will continue to evolve. If FIT's cross-agency efforts and GFIN's global collaboration succeed, we may finally see more cohesive and agile frameworks that would reduce complexity while preserving safeguards. Fourth, digital banks will grow more embedded. We'll see partnerships that integrate fintech features into banking systems, and vice versa, blurring traditional distinctions. The future may be less about standalone apps and more about seamless financial ecosystems. Fifth, crypto and DeFi adoption will continue to challenge how we define finance. We'll likely see regulatory clarity and previsibility around stablecoins, tokenized payments, and digital asset custody. Sixth, privacy and security will remain central. Fintechs that lead with trust by design, not as an afterthought, will gain consumer favor and regulatory goodwill. So now that we've woven through verticals, risks, players, and future directions, what does this mean for our viewers? If you're a fintech founder, focus on user needs, data protection, and regulatory alignment, not just features or growth metrics. If you're a consumer, explore digital tools, but demand transparency, fairness, and control over your data. If you're a policymaker or regulator, embrace innovation, but also ensure accountability, oversight, and equity. Fintech's promise depends on all stakeholders playing their part. And for us here at Fintech Insights USA, we pledge to continue breaking down the most significant developments, introducing powerful fintechs, and interviewing thought leaders shaping the future of finance. If you found this breakdown useful, do us a favor, hit like, subscribe, and ring that notification bell so you never miss our insights. And I'd love to hear from you in the comments. What sector are you watching most closely? Is it real-time payments? AI and finance? Digital banking? DeFi? Or something else entirely? Your perspective helps shape our next videos. Special thanks to our research partners, chart creators, and the fintech developers who are transforming how we bank, invest, and transact. Remember, innovation isn't just about speed, it's about responsibly improving lives. Stay informed, stay curious, and see you next time on Fintech Insights USA. Thanks so much for watching. Until next time, keep building smarter, more inclusive financial futures.